Ladies and gentlemen, good day and welcome to the XELPMOC Design and Tech Limited Q2 FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Udeshi from Christensen IR. Thank you, and over to you, sir.
Thank you, Raymond. Good evening, everyone, and thanks for joining the Q2 FY21 earnings call for XELPMOC Design and Tech. Great pleasure to have all of you in this call today. The results and investor presentation have been mailed to you and is also present in the BSE website as well. In case anyone has not received the release, please do write to us and we'll be happy to send the press release and presentation to you. To take us through the results and to answer your questions, we have the management of XELPMOC represented by Mr. Sandeepan Chattopadhyay, MD and CEO, and Mr. Srinivas Kura, the CFO of XELPMOC. Mr. Srinivas Kura will start the call with a brief overview of the quarter gone past, and after that, we will throw open the floor open to Q&A. The standard safe harbor clause applies, and with that said, I now hand over the call to Mr. Srinivas Kura.
Thank you, Ravi. Good evening, everyone. Welcome to XELPMOC's earnings call for the second quarter of fiscal 2021. I hope you and your family members are healthy and safe at home. I'm pleased to share with you that we continued with our execution built on identifying the opportunities in the sector that fit our HEAL strategy. Our operating revenue for the quarter was 34.7 million as compared to rupees 34.1 million in Q1 FY21. On year-on-year basis, we grew by 129.9% as compared to 15.1 million over the corresponding period of last year. EBITDA for the quarter increased by 6.3% on quarter-on-quarter basis to rupees 14.9 million as compared to rupees 14.1 million in Q1 FY21 and a negative 13.2 million in Q2 FY20. EBITDA margins also grew from 40.1% in Q1 FY21 to 40.3% in Q2 FY21 due to our focus on cost management and the resulting gains on account of the pandemic. Net profit for the quarter was 15.6 million as compared to 16.7 million in Q1 FY21, while it was a net loss of about 11 million in Q2 FY20. More than half of our revenues came from international clients, which highlights our client network connect despite the international travel restrictions. Our team size is about 106, including employees, interns, and consultants. Till date, we have served about 41 clients, and our good results have been built on sustained in-depth involvement with our clients. The fair value of our investment in portfolio companies stood at approximately 439 million as of September 30, 2020, as compared to 285 million as on September 30, 2019. One of our portfolio company, Mihub, recently concluded a Series A5 round raise. Mihub continues to add to its offering in diverse sectors. Another portfolio company, TSIM, has been awarded by Hyderabad Software Enterprise Association as a top 10 startups of Hyderabad and also a winner of Women-led Startup. Our EdTech venture solution is being rolled out to increase its coverage from a single digit to double digit in terms of number of schools. Though the pandemic has partially limited our appetite for new acquisitions, yet we managed to sign new portfolio companies. Last week, our board has approved investment in Afterthought Feedback Services Private Limited, a Hyderabad-based company, which is into market research and online service. And the other company, Group Fit Ventures Private Limited, with plans to foreign preventive healthcare, and another company which is based out of Bombay, Nayak Tech, a data science technology and a strategic solution company in the wealth management space. Our board has also approved investment in our wholly owned subsidiary Signal Analytics Private Limited, which will act as a fulcrum for developing and investing in education technology, including related content, activity kits, QFX, gaming, and subscription marketing of our core non-specific IP. Further, our board has also approved incorporation of a company's UK subsidiary in the interest of promoting our business at a global level. Now, I come to the forecast for the balanced fiscal. We would be continuing to concentrate our resource on attractive markets and portfolio, including Fortigo Networks Logistics, Mihoop, Woovly, health sector, insurance, education, edutech, and agriculture. We are seeing some good growth opportunities in insurance and healthcare due to the increased focus on personal well-being. We reiterate our outlook on being EBITDA positive in FY21 and excluding any ESOP. We retain our cautiously optimistic outlook given the current challenging times, limiting the opportunity to bring on board new clients. With this, now I request the moderator to open the floor for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Sudeep Bujur, who is an individual investor. Please go ahead.
Hello.
Hello.
Hello. Yeah, and thank you, sir, for the opportunity. I have a couple of questions. First is there has been an increase in our trade receivables. So I just wanted to get an idea on that particular item. And the next question is that our investments in Learning Hats and Catalyst Corporation, have they? I can't see them in the list of portfolio investments. So if you could explain that.
Yeah. So to answer your first question, why the trade receivables increase, most of the billing has happened in the month of September and October, because of which you have seen a trade receivable. And the investment in Catalyst and the Learning Hats is under process. Most likely, we should be able to conclude in this quarter. Even when we have given it to the exchanges and intimation, we said that it will take time because it's in the process. It will be concluded this quarter.
Okay, thank you. And another thing, the increase in the investment value of our portfolio, is it purely due to revaluation, or we have increased stakes in some of our investments as well?
So basically, in couple of entities, our investment has gone up, because basically whenever we sign up with any new entities, we also pick up equity for developing technology. So Pencil is one among them. And apart from that, what happened was there was also a round of investment which has happened in Mihoop, which I stated right now, where Mihoop has gone ahead and raised a Series A round of funding, A5. Yeah.
Okay. Okay, sir. Thank you. That's all from my side.
Thank you very much.
Thank you.
Thank you. The next question is from the line of Hasmukh Gala from Finvest Advisors. Please go ahead.
Yeah, thank you for the opportunity. Just a few questions. My first question is that what is our plan for the education ventures?
What do you mean by that, sir? Education venture, we are just having a product which will be catering to schools. That's the edutech part of K-12. And apart from that, we are trying to get into some other areas which are, you may call attainment, not the formal education spectrum, but in creating interest in science or interest in other subjects through activity-based approaches and stuff like that. That's a different line of business for which we are just taking Signal as a subsidiary, and we will be constructing some paradigms there. The idea is to go for B2C things here through a clutch of investments or startups who we will co-create along with the founders.
Okay. But the way in which the learning, etc., is going on because of this COVID situation, so do you see any increasing opportunities in the education space?
Everyone sees the opportunity. That's why there are so many takers in it. It all matters as how you execute it and how you are able to distribute it. So we are taking care of those aspects and doing it, but we believe that edutainment has a growing need now, especially because of not just the pandemic, but also because of the non-modernization of things in gaming and toys and self-sustenance onto that part. We do see an opportunity increasing there.
Okay. My second question is, the new investment that you have announced, do they have any platform, or will you be creating any platform like what Fortigo has?
All of the projects that we take, sir, is where we have our technology role to play and we are the technology implementers. And we act like the co-founder for technology for all these ventures. So yes, by rule, any venture that we are investing in is because we want to develop some sort of a technology platform or a solution which will cater to the targeted audience.
Okay. Now, another question is, somebody asked the question previously, how much extra investment we have made in the existing company as a result of which our total valuation has gone up by around 26%?
You can answer that technically. I don't think we have made any big investment in any of the existing companies.
Okay.
See, basically, what we did was in couple of entities like Lead Start Publications and Fema Vista, where based on the technology, the investment has gone up, but it's very marginally. The growth in investment, what you see is especially coming from MIHOP. In case if you look at MIHOP as on 31st March 2020, it was 5.31, which has gone to 11.84.
Yes.
Yeah.
Okay. Now, my another question is, what kind of value creation and the time horizon do you have in mind so that, the wealth of the shareholders can increase in our company?
We don't have any number in mind, sir. But of course, we'll try to maximize whatever opportunities we get. And we have taken sectors which we believe will have an auto growth, which will lead to the value increase. And from the past experience, if we look at it, I think the choosing of the sector and the entrepreneurs has been pretty much verified by the increasing share in their holding. So to put a number on it, we want to enter the sectors that we have already remarked. We will not deviate from that. We will try to capitalize every opportunity. But as you understand, with any startup, the chance of success and failure is not predetermined. We try to minimize the chance of failure by putting in our best effort. But choosing the sector, we make sure that we are not chasing the wrong goals by making sure. It's about judgment and all. But finally, all it comes down to is execution and how the market takes it. Hello?
Yeah.
Hello? Yeah, okay.
Yeah.
Thank you. The next question is from the line of Puneet Motihar, who's an individual investor. Please go ahead.
Some good set of numbers. My first question is regarding the ESOPs. We have two different pricing for the same. Can you please throw some light on that?
Yeah, it is basically people who have joined at a different phase of time, and whatever negotiation that we did with them, based on that it has been issued. So that was predetermined while onboarding an employee.
Okay, so certain employees will get the 10 rupee ESOP.
Yeah.
Depends on when they join. At that time, whatever is the fair value.
Yeah, well, we have been agreed with them based on that and subject to board approval and etc.
Okay. So, and my second question is based on hiring. We have close to 106 employees on board. When do we expect that number to cross 150?
No such time limits or anything of that sort. We will hire as we feel the need for it, and there will be some increase for sure because our project load has increased significantly in the last 4-5 months. But we don't have a target that we have to get to 150 people, because unlike other places, we are not into a body shopping business. We hire on the need basis and on the kind of calculations basis that we need to do for new work that is being done. Leveraging the existing frameworks, being able to make more sense out of it or more variations out of it is the current focus. For the moment, we typically are slightly less than comfortable kind of a situation in terms of recruitment, but we are never short-staffed.
Okay. And so most of the recruitment will be done in India, or will there be some onshore recruitment as well?
Once we set up the European venture for UK and all, we have allocated some budget for at least having 2-3 head people who are stationed there. We are not trying to set up a front office in London. We are trying to create a business in London, which will be a subsidiary of India. To that effect, whatever is the right person to approach the market, because sending a person from here who will gather the market intelligence and then marketing probably is a little bit of a long-term planning. We may do that for junior people, but we do plan to hire 1 or 2 senior people, but not more than that.
Okay. And the London business will mainly cater to trade stream, or are there other?
No. London business is for the European market services.
Okay, that includes trade stream as well.
Yeah, everything.
Okay. That's it from my side. Thank you, sir.
Thank you.
Thank you.
The next question is from Ayush Gupta, who's an individual investor. Please go ahead. Ayush Gupta, you may go ahead with the question. There seems to be no response from the line of Mr. Ayush Gupta. We'll move to the next question. The next question is from the line of Om Prakash Shah from Amity Investments. Please go ahead.
Thanks for giving the opportunity to ask the question. Sir, our valuation is given at $43.9 billion rupees. From sources and papers, we know that this is much higher than that. So, is that true, sir, or only fair value given to this?
Basically,
sorry, sir, can you repeat? Yeah, sorry. Say you go ahead. I had some disturbance.
Basically, we have given you fair value based on like a very conservative estimate and based on the last round of funding of the companies.
Yeah.
So, for example, in case any of the companies can go ahead and raise at a pretty higher valuation, the startups, how the valuation can keep on increasing quarter on quarter basis. For example, you have seen MeHoop, like it was valued close to about 5 books as of 31st March, but it has good jump to 11.8 for more than 100% jump in 6 months.
Yeah, but their new allotment done at much higher prices to the Excel Partners, Ideal Spring and Nandan Nilekani from Fortigo, sir. So, is that included or not, sir?
Fortigo is a separate entity. Fortigo we are showing it as it is about 19.5 crores as of 31st March, and as of September it is 21.79 crores.
Yes, sir. Thank you, sir.
Yeah. Thank you, sir.
Thank you. The next question is from Salva Kumar, who's an individual investor. Please go ahead.
Yeah. Thanks for the opportunity. My question, I have a couple of questions. So when looking at the value of the portfolio, like some of the companies, the fair value is decreasing, like when compared to March 31st, 2020, and then the value is decreasing. Like for example, Madwork Ventures Private Limited. Can you please throw some light on that? Like what is the future prospects of those companies for the value getting decreased?
See, pretty much we went based on their performance, and as you know that the last 6 months, like most of the businesses were suffering because of the pandemic. So we have taken a very, very conservative approach, and in case if you look at it, it's about 5.99 lakhs going to about 5.12. In case if you look at overall the portfolio size, it's about close to about less than 1 or 2%.
Okay. So you mean to say that the prospects are looking good, but still due to the pandemic,
Yeah, because basically we have taken a very conservative approach.
In the absence of any other benchmark like external funding, we take a conservative approach based on the situation and the business's fitment into it.
Okay. Yeah. Okay. My next question is so we have some data products so how much really it is contributing to the revenue?
Sorry?
So we have some data products like DocX, all sorts of things. How much it is?
Yeah, as I said, those products are expected to be there. There are some projects going on, some proof of concepts going on. But as I had said earlier, also we expect the revenues from those to come in only next year, first quarter, second quarter onwards.
Okay. So when taking the
time to mature. Products take time to mature. You have to deploy it in some places. You have to do some things which are fine tuning. Then you can actually make it into product.
Okay. So when looking at the cash flow, so where we are really getting the money, is it from the corporates or is it from the startups?
That Srini can tell better. Srini?
Come again?
Source of fund, source of income.
Yeah.
Source of?
Income. Which sectors? Yeah.
Yeah, other source of income is basically purely on
the source of income, which is our main paying customers, startups, corporates. What are the main paying customers?
Oh, main paying customers are generally startups.
Okay.
Learning Hats is one of the biggest customer who is paying us. Slate is one of the customer who is paying us, and Lead Start Press, TSIM, like this. The list goes on. The majority are the startups.
Okay. Yeah. Thanks.
Thank you. The next question is from the line of Harish Kumar Gupta from Nirmal Bang Securities. Please go ahead.
Yeah, hello.
Hi.
Hello. Yeah, sir, I have a question. Right now we are around 100 employees and our quarterly run rate is around 4 crore. So can you please tell me, if we want to achieve the turnover of double, our number of employees will be doubled, or what will be the approximately ratio?
See, doubling the revenue has several aspects to it, but if you look at a kind of a metric that you're trying to look at, then depends on which source the revenue is coming from. If we decide to stay profitable but still go that up way, then the number of people that we would need probably would not double for doubling the revenue, but probably would have to increase by 75 to 80%. If we focus on our startup company and the corporate mix in this current fashion.
Okay. Thank you.
Thank you. The next question is from the line of Tisha, who's an individual investor. Please go ahead.
Hello.
Disha, there's a lot of disturbance on your line. Request you to use the handset if you're on the hands-free.
Yeah, I'm on the handset. Can you hear me?
Yes, much better. Please go ahead.
Thank you for the opportunity, sir. I have a question on Woobly. Recently, certain media articles stated that Woobly has pivoted to a social commerce model. So can you highlight the opportunity in that particular space and how is Woobly trying to monetize things like that?
Sorry, am I back here? Can everyone hear me?
Yes, sir.
Yeah.
So, did the last question get answered? I was in the middle of it and then I got broken off.
Okay, so I was asking about Woobly. So, a certain media articles state that Woobly has pivoted to a social commerce model. So, I'd like to understand the opportunity in that space, the social commerce space in India. In general, if you could throw some light.
We seem to have lost the line for Mr. Chattopadhyay. Participants, please stay connected while we reconnect Mr. Chattopadhyay.
All right.
बिट्टू लाइट में है क्या?
Participants, thank you for patiently holding your lines. We have the line for Mr. Chattopadhyay reconnected. Over to you, sir.
Sorry guys, bad network. I was not reachable apparently, so it's fine. Yeah, so I was answering a question about the manpower and how it changes depending on the source, right? So as I was telling that if we need to double it up with keeping the current mix of focus on startups and all, then we would not need to go to 100%, but surely 60 to 75% more people would be needed to double the thing at the same ratio. However, if we go on the services part, the number of increase could vary anywhere between 30% more to 60 to 75% more.
Okay, thank you.
Hello.
Yeah, hello.
Yeah, Disha, go ahead with your question.
Yeah, sir. Wanted to know about this company called Woovly that we've invested in. It is, pivoted to a social commerce model. So I'd like to just understand the opportunity in the social commerce segment today in India and how is it going to span out and things like that.
We thought it's a great opportunity. That's the reason we pivoted. It's doing pretty good. The numbers and facts are there on one LinkedIn report that is there for that part. But till now, we have not lost any customer base because of the pivot. In fact, given the pandemic, there was no point telling them how to fulfill their bucket list. They are hardly able to go out of the home. So it was more of a customer-driven need where we felt that the social commerce is something that the same customer base would want. We piloted that. That had some success. And we are seeing some early traction. And according to we have not got detailed reports on it, but just from the talks with we obviously keep on talking to our entrepreneurs. It seems to be profitable right from the beginning.
Okay. So I have another question. Can you hear me?
Yes, please go.
Hello.
Yes, please go ahead. We can hear you.
Yeah. So of all the industry companies that we have, how many companies actually have a monetization plan or a strategy in place? Like there are a few companies where we don't know whether they are in seed stage or whether they have the right product market fit or where are they? Like for example, Taxi Top Media or Let's Start Publishing. Do they have a monetization strategy in place? How are they faring? Like there's very less coverage on these industry companies, so just like to understand that part.
Yeah. So there are two parts to your question. Firstly, if there is no monetization strategy, we of course don't start the project. So there is a monetization strategy by default for any of our ventures because we are into the class of ventures which are focused on sectors where monetization is a must before we start the venture. It cannot be something like we will invest now, we will grab eyeballs and then we'll see how to monetize. So all of them start with the monetization policy. That said, they all of course have to look at the market realities and keep on pivoting. And that's why we insist that there should not be an obstinately fixed plan. It should be dynamic and market oriented. Now, the second part is the stage of development of a product or the company is there. And typically companies are mostly in two stages. They are either in pre-market stage, wherein they're developing the product and do it. And we have some startups in that phase. But, because of stealth and all those things, we don't like to disclose these details too much. And the second startups, of course, are the ones where they already have got market share, but they are also in continual development to keep on updating themselves to stay relevant and to have more opportunities in the market size. So as a nature of it, most of the startups are always in enhancement or code development, either of these two stages. None of them are in a different phase. And to answer back to your first question, without a solid business plan or a monetization scheme or strategy, we don't even start the project, not even invest in them.
Okay. Got it, sir. Thank you so much. Thanks a lot.
Thank you. The next question is from Yashish Ajmera, who's an individual investor. Please go ahead.
Thank you, sir. Thank you for the opportunity. So I just wanted to understand one thing. It was that what is our mode of service? So is it on a continuous basis or is it where, we provide a platform to a startup on an initial basis, we get the equity and we, continue to engage with the startup and make sure that the valuation is, valuation is grown over a period of time. So I just wanted to understand this simple thing.
We have already covered that in some past con call. I've explained the process, but I'll explain it again, apologizing to others who may be bored by the repetition. The thing is, we work more like a build, operate, transfer, observe kind of a model, right? So as a fact, when we start off the project for a certain period of time, we surely are the sole developers. But as each of them grow in size and stature and can support their own teams and have critical mass to form teams, we start helping them form the teams right from the senior management onward. And then in a phase of time, we transit out from active development, but we keep on engaging with them for any development which is new in nature or as a challenger to the current development by finding onto that part. So our values and all are slightly, you may say, random in that case, depending on the need based. But for the core set of startups where we are at the starting point or till product maturity, we are in the co-development or complete absorption phase in those parts.
All right. Thank you. Thank you so much.
No problem.
Thank you. The next question is from the line of Sandeep from Wipro. Please go ahead.
Hello, am I in?
Yes, Sandeep. Go on.
Yeah. So my first question is what are the performance of the major portfolio companies that you have? Like, can you just give some details about it, like Fortigo and Mihawk, for example, how they are doing right now, and where do you see in their growth situation?
I think whatever information we are allowed to give, we give, because remember, these are separate companies. We have to adhere to their principles also. But I think Srini can briefly tell you whatever is publicable.
Yeah, whatever is publicly available and whatever that we can do, we have already included, but we will not be in a position to disclose more about these portfolio companies because those are separate entities. We are also like a part of an investor, and there are other investors also involved.
Okay.
Yeah.
Okay. So, yeah. So my next
But whenever a landmark event happens, we do highlight that, we do tell whatever is publicly available, we try to keep everyone involved on that part. So whatever is publicly available, I can tell you, Mihawk has got the Tata Motors contract, wherein every Tata Motor in the passenger car segment, which is shipping, is going with the Mihawk. We have bagged some orders from some of the planes. I don't think the names are givable right now. That will depend on them. And also about the fundraise. Fortigo, whatever is disclosed in the public, not much more public information has come. So if you look at our annual report, the last public known information is already there.
Okay. Next question is I can see there is a good amount of cash buildup from the operations, and also like the cash and cash equivalents have also grown quite a bit. So what are the plans with that particular cash that you have in the account right now?
So we've already told some of our plans, right? You saw the formation of the subsidiary in London, which we will obviously need to invest money in. We have talked of certain investments we have done in this quarter on some of the startups. We have to find our next batch of startups also. So we'll be actively pruning onto that part and honing onto those things. So those are investments that will happen. And there are certain plans that we have for which we have signaled it by having the Signal subsidiary set up, which we said in the entertainment sector. So as and when we get clarity and sort of distributable information, we will keep you updated first of all.
Okay.
But let me be very clear, we are not here to become your money manager by holding money and investing in equity, which you could have done better than us, or mutual funds. The idea of the company money is to best utilize it by keeping provisions for rainy days. We will adhere to both those principles and make sure we maximize the utilization of the fund.
Yeah, sure. Yeah, that's all from my side. Thanks a lot.
Thank you. The next question is from the line of Mayur Damani, who's an individual investor. Please go ahead.
Hello. Thank you for giving me an opportunity. And first of all, I just want to congratulate you for a decent set of numbers. And at the same time, in the investment community, our company is also being considered as a mini info edge in the making. So congratulations for this, because this is a very good achievement at this stage. And with respect to investments, do we have an option to increase our stake in the evolving businesses as and when it happens in future? For example, in Ideal Insurance, our cost, our acquisition and this thing is little less. So as the insurance penetration increases in India, do we have the option to increase our stake at the old acquisition price?
So as a prior contract agreement or anything of that sort, we of course don't have anything like that in place. But given our relationship with our startups where we are involved and interested in, I think that's always an option at every funding round. We have seen that it will be like a drop in the ocean if we try to go with our piddly amount of capital that we can invest into it. That said, for whenever there's a promising thing or something we believe in, we have taken exceptional route. But primarily, we will not want to invest money in the raw form into startups still a certain level of maturity more for XELPMOC itself. We are very flattered to know that we are being compared as a mini InfoEdge, but we want to state clearly that we are XELPMOC and we want to be known as the company which looked at it in a different way. Our entire involvement is much, much more deeper than just investments. So that's the reason why probably the comparison to InfoEdge ends. Our main focus is to make sure that the principle is we believe that when the money is being spent on technology, we are the best value for that amount of money. So instead of giving money to a startup to buy technology, we would rather build the technology for them and give more value for that money. That has been our philosophy from day one, and we want to adhere to that.
Okay. Yeah, thank you very much.
Thank you.
Thank you. The next question is from Siddharth T, who's an individual investor. Please go ahead.
Hi. Thank you for taking the time to answer my question. You've kind of answered part of it with the previous question. So most of the new investments I see, you're investing through OCPS or CCPS. And I mean, a significant amount of your revenue, I think, also comes from investments that you've made into your other startups. So my question basically is, since your revenue is tied into your investment, are you looking at other revenue streams as well from external, other sources? And would you be funding other investments by raising other debt or external debt?
Srini can answer why we do OCPS in terminology, but I can tell you the basic philosophy. Yeah, please Srini, go ahead, and then I can add on to it probably.
First and foremost important thing why we go ahead with OCPS is like the contracts what we enter with these technology companies for developing technologies for a period of 2 years or 3 years. So accordingly, we enter into OCPS so that this can be converted into equity over the period of time as and we build a technology. So it's a win-win situation for both the XELPMOC and also to a startup. So even if you look at our current revenues, like I don't say that most of the revenues are from this issuance of shares, but yes, close to about 50 to 80% would be coming through issuance of shares. But otherwise, the balance revenue what is coming is directly to cash payment from the startups or a couple of corporates.
Yeah, coming back to your second part of question, that would we be raising debt to invest into something or the other? Well, if the opportunity looks very promising, yes, we may, but that is surely not our preferred method or anticipated strategy. We have the method that we are following now as something which is working out. But that said, we probably, when we go into new markets and we have more ambitions, some amount of investment would be necessary. See, the public face of the company, of course, is since 2019. But there have been 3 years and more existence before the company went public. And at that point, unknown to most of the public market dominion, we had to invest a lot of money without knowing things will come back or not at all. It's only when it formed into a solid business, which was running like a ticker tape, did we go public. So when we start a new venture, that capacity and that thought has to be there. So when we start a London operation, or tomorrow we say that we want to set up a Bangladesh operation, or day after tomorrow Africa operation, that risk of new thing will always be there. So once we go there, we would obviously have risks much more than our current business here, because it's more of a set pattern now. We know somehow roughly the probability of success. That's an unknown. We would still like to limit it to a frugal means. But if we think that the opportunity is big and the board approves, of course, we can take any steps. So all options are open, but that's not the preferred route out for us for future.
Thank you. Just to clarify and not take too much more time.
Go ahead.
So your major source of revenue that you see is through investments and transactions.
No, sorry, I forgot to answer that. Sorry, I forgot to answer that question. As we have said that there are 3 avenue routes for us. The startups are, of course, where we develop for them, but that's not a high margin thing at all. Actually, that's almost zero margin. Our main thing comes from corporates and other parts, or from startups which have gone ahead and done well in life, right? And we do hope that the corporate and services industry post-pandemic will again pick up. We had seen a kind of a just pre-pandemic, we had seen a rise in that because we had put efforts into marketing. But unfortunately, the pandemic struck and our marketing efforts had to take a beating there. But we do hope from January onwards things are going to clear up and we will be back on track on that part. Whatever we could market in that time has sustained us for a certain time. And despite the pandemic and all, we do see prospects of some corporate contracts here and there coming in, but it's not in the avalanche way that we would want it. So that is surely the second the pole or the pillar of revenue that will be there. And in many of the startups, we do have contracts and we do have understandings wherein or our entire thing, whatever you call it in legal terms, that apart from the development at cost and the equity that we hold, we also get a pass-through of the revenues earned by that startup. Now, those startups are just seeing the light of day. So that would be the third pillar of revenue, probably, let's say, 9 months down the line or so.
Then thank you for answering the questions and best of luck.
Thank you.
Thank you. The next question is from Hasmukh Gala from Finvest Advisors. Please go ahead.
Yeah, I have one question. This new acquisition that we have announced, this Signal Analytics Private Limited, that is a related party transaction. Now, what will be the activities of that company?
So, the related party transaction to a level of 20,000 rupees, and that's because of the corporate laws where it's easier to form a company with two individuals. And then there's no related party transaction in that sense. It's just a technical related party transaction. The fact is we have a 100% subsidiary now. And like I said previously, we have set it up because we want to park a little bit of a fulcrum kind of an approach there, by which we are able to go and create a bouquet of services in the edutainment sector, not the formal education sector, but gaming, the robotic toys, those sort of ventures we do out of there.
Okay. Now, sir, there is a similar name company, Signals Analytics, based in New York, USA. Do we have any relationship with them?
No connections at all. Any connection is purely accidental. We didn't even know till you told us.
Yeah,
there is no connection.
It is plural. It is Signals Analytics and we are Signal Analytics.
Our reason for giving Signal was because it's almost like a plaything for the kids. Go, no go, interest, not interested, very interested. So we thought of it that way and we named it this way. It's mainly a data analytics based, the Fulcrum will have to be data analytics based system which does subscription management and stuff and gives impetus to the other companies to know what kind of product would suit this kid the best.
Oh, okay, fine.
Thank you. The next question is from the line of Shubhrato Sarkar from Mount Intra Finance. Please go ahead.
Hello.
Hello.
Sir, so I am tracking your company very recently. Sir, just to understand one thing, like this fair valuation which you have done of the investment. So what is the method of that, number one? And second is like, sir, how to get a understanding of how much percentage shares you are holding on that particular company or something like that, so that we can have an understanding like.
Sir, we are extremely transparent about these things. If you go to our annual report, every holding into the last second decimal place is given there. There is absolutely everything is out in the public domain. You just have to look at the annual report for that part. And I think Srini has just explained that the fair market valuation is done on the basis of conservative estimate on the last known time of fund insertion. That is the best way to think of it.
It's based on discounted cash. Yeah, it's done by third party, sir. It's done by third party. It's done by third party based on the discounted cash flow method. And apart from that, what is the holding, etc. We have given complete details in our annual report, including other investors who are a part of that particular portfolio company.
Thank you, sir. Thank you. That's my only question.
Thank you.
Okay.
Thank you. The next question is from the line of Ayush Gupta, who's an individual investor. Please go ahead.
Hello. Am I audible?
Yes, Ayush, go ahead.
Yes, sir. First of all, thank you for providing me the opportunity. And my question is like, in this quarter, we did sales of 3.5 crores. So out of those 3.5 crore sales, can you tell me like how much is contributed by our investee starters? I mean, our portfolio companies where we have invested, and how much percentage of sales has been contributed by the clients, the non-portfolio companies?
Srini?
So basically, the majority of the investment is coming from our own startups. You can assume that close to about approximately 90 to 92% is coming from our own startup entities, or where we have a deeper relationship holding some sort of an investment.
Okay. And my second question would be as said in the last couple of con calls that we have plans to start our foreign countries like Africa and Southeast Asia. So any update on that?
The first update was that we gave about London. That's our first port of halt. And after that, we will look at that. We are in talks with some of these places, but they're in very early stage. Nothing to disclose as of now because it's just at the ideation stage right now.
Mm-hmm. Okay. Thank you.
I think the reason is we have been always thinking that the pandemic will end in another 2 months, 3 months, but it's been going on. I don't see a clear view inside, but I hope, and more or less from the data that I have in hand and all, it seems that January is something we can safely assume we will slowly start trickling back into normal business.
Wow, awesome. Thanks, sir.
Thank you. The next question is from the line of Kishan Tosniwal from DKMS and Associates. Please go ahead.
Yeah, good evening. First of all, congratulations on the set of numbers. I have two questions. You have shown the operating margins at 43%. First of all, is it sustainable going forward?
No, sir. We have said in the last board meeting or analyst call also, this is not a sustainable EBITDA margin at all.
Yeah, then why is it at 43%? What you are seeing that it is going to go down? What is the reason behind it that you feel that this is not sustainable?
Because of the pandemic, a lot of the costs that are there, which is significant for a small company like ours, like marketing costs and rental costs, staff welfare costs when the office is running, those things have not been incurred during the quarantine period, right? So that adds to our benefit. And for us, that's because of our negligible size right now, those are significant numbers.
Okay. And the second question is the revenue that you are showing of 3.5, then 3.4 and all this. How sustainable is this, and when can we see the next, jump into it? Like it has come from last year, there was 1 crore, then it has come to 3.5, now 3.5. Now when are we expecting it to grow to the next level? Or is it
at this point of time, we expect it to grow, but in a jump kind of a scenario, I think we'll wait and watch till the whole, because we are not income and we are not inert to the environment around us. So I think to give a fair assessment, once we get out of this extraordinary situation we all are in, that will be a fair time to do it. But I personally feel that you will see some hike, but of course not a jump to the level we would have wanted had you asked me this question 7-8 months back when pandemic was not in the scenario. So now we have very less option but to re-strategize. And once the pandemic situation goes out, once we understand what is happening, we will be again looking at a new fresh set of plans and be able to tell you that. But at the same time, jumping and all is not the objective. The objective is to making sure that we have taken right from the day when we went public, we had said this is a 5 to 7 year time frame. We want to make sure that our end goal of 7 years is what we don't get lost from in doing pursuits of sudden jumps here and there for the short term. So the growth is the first objective, and whenever I have a chance between growth, which may be slow revenue earner, but through an amazing startup idea that we want to pursue, we would chase that more than lucrative contracts which can give us higher EBITDA and higher margins. So I hope you understand the philosophy with which we'll approach the problem and how we'll do it. But despite that, we will have growth, but whether it will be a jump or not, that will depend on the opportunities we see.
But we are going to maintain this at least.
I hope so. Yes, sir.
Thank you very much.
Thank you. The next question is from the line of Amar Karadia, who's an individual investor. Please go ahead.
Question. And firstly, congratulations on building this beautiful company and a wonderful set of numbers. So someone on the call compared us to an info edge, but and of course we are XELPMOC what it is, but the business model and the portfolio has a lot of to Y Combinator. So on that line, sir, just one single question. Do we intend to demerge or separate the two businesses? One would be the enterprise business, the other would be the startup and investment-led business in the future. And the second question, which has partly been answered, but I will still ask if I can get more insights. Do we intend to do direct equity investments like an early stage or an angel investment where there is not much of a technological, understanding, but as Sandeepan sir said, if the opportunity looks exciting for growth, you would want to go for it. So do we have any such plans?
So as I said, there are no straight no's to any of these things. We live in a very different world, but there are certain things. I'll answer your last question first. The probability of us doing that probably is about 5%. Only if the idea is strikingly, very extremely, absolutely exciting and we don't need to play a role, but still we want to stay invested, we may do it. But the likelihood of that is very less. Coming to your first point as to whether we want to, in future, whether we want to get into that route and all, of course. But when I say future, I mean 3-4 years down the line at least. By that time, I don't know how the entire finance world or how the entire investment world will change itself. But of course, if there's an opportunity by which we can do that, we will do that. But for the moment, it's completely being able to bet on our own capability in being able to execute. And those are the startups we want to get the maximum bet on. That's the main difference that we want to say. Now, as a differentiator between us and let's say the other aspects that you talked of, be it in InfoEdge or Y Combinator, we are actually developing the product. We are doing the entire hard work. We are not just a funder or an advisory body or a kind of a filtration process. We are much, much more than that. And the second aspect is, as we have told differently, is that because we think of ourselves as the co-founders and all, for one problem area, we work with one entrepreneur set only. That certainly is a very distinguishing factor of XELPMOC.
Right. Thank you so much, sir. Noted.
Thank you.
Thank you. We have one last question. We take the last question from the line of Chaitya Agarwal, who's an individual investor. Please go ahead. Chaitya Agarwal, you may go ahead with the question.
Hello.
You can take one more question if he's not there.
Hello.
No. Hello.
Hello. Am I audible?
Yes, please go ahead.
Yeah, sir. I have a couple of questions. Like, can you please bifurcate the revenue segment-wise? And the second question is, what are the directions for the quarter 3 and quarter 4? And the third question is, any plans for investment in other industries like renewables and any other industries?
So I think the first question has already been answered. I'll just repeat it. Probably you have missed it. So we did say that 92% of our revenues are coming from our startup bouquet itself and 8% from external sources. From the third and fourth revenue perspective, we obviously want to make sure that the amount of revenue coming from the corporate sector and from other sources increases significantly. When I say significant, at least goes to a ratio of 80-20 minimum in the next 2 quarters or so. We are on it, but at the same time, we are aware of the constraints that we have due to the current COVID situation. But as you know, that we are a small company, we don't want to focus marketing dollars on an impossible situation. We'd rather wait for the time and put our money to better usage.
Okay.
And did I miss a question? I think there were 3 questions.
Yeah. One more question is like, any plans for investment
the other
in
sectors? The other sectors. Yes, of course, we are always looking at crossover sectors and new emerging sectors for doing our part. But more importantly, given the health stack that we work on, I think innovating on that part and making better services is a bigger focus for us than looking at innovative areas which are new and untested for the moment. We may do 1 or 2 of them, but the bulk of our focus will still remain on making sure that we stick to our core competence and our focus on the health sector.
So, sir, any investment in renewable energy sector?
No.
Hello?
No, we don't have any investment in renewable energy sector, no.
No, any plans for that, like if you get the opportunity?
Not really, unless it is about, doing some sort of a software management of that, anything which is core
like
and
the
outside our core
ERP or
competence.
the ERP system based or the platform where the...
Yeah, so we have an ERP product which we would rather try to sell to these industries than get into the industry itself. When we think of getting into a particular sector, we think that we are part of the solution making and developing process. Anything else which is peripheral, we will be tackling with our product offerings.
Oh, okay. Thank you, sir.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. Sandeepan Chattopadhyay for closing comments.
I think from a personal point of view, this has been one of our most understated but extremely efficient quarters. Despite the incumbent adverse effects and situations, the fact that we took the right strategic calls of not pursuing hard problems and trying to more or less introspect and try to leverage that is there. A lot of thanks to the team which is not in the development part but in sourcing of the startups and all for closing some amazing deals which we think we will see nice things. The ideas that we have got and that the kind of risk averse, if you might say to some extent, but some sort of an aggressive stance that we have taken in setting up London subsidiary. I think these are sort of indicators as to the fact that the confidence and the kind of overall part that we are seeing in trying to expand ourselves is displayed properly and also not just displayed or not on theoretical but actually in actions. So I think this was a pretty much of a, in retrospect, I hope that when we look back in a year or so, this would be probably one of the changeover quarters for XELPMOC.
Thank you very much. On behalf of XELPMOC Design and Tech Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
Thank you everyone for being here. We appreciate that.